I have 10K to invest, and what would you recommend?
Oh, blimey. Okay. Let's have a conversation then, shall we? Right. Well, first of all, Cherry, it's lovely to have you on the show. And you've got $10,000 to invest. First of all, I need to be absolutely clear that I can't give financial advice. I don't give financial advice. You understand that? I'm an entertainer, but this is our family of traders and investors, and we're all, trying to support you in the best way possible. You got $10,000 and you're eager to get in and invest. Well, you've been watching us now for a few days and you're learning the ins and the outs of the market. The first question I'd have to ask you is, if you're going to invest $10,000, have you got, first of all, any debt or any credit cards, loans, mortgages behind you?
No.
You don't. So you're in a very good position then, because you've already paid off those loans and debts and so on. You've got cash ready to rock and roll. Well, if you don't mind me asking, what is your age?
54.
Okay, 54. And it's important why I ask, because what is your objectives? What are you hoping to achieve? Because before you start investing, you have to know exactly what it is you wish to achieve. So is it to provide financial freedom in a certain period of time? What is your goals and objectives?
Financial freedom in 10 years.
In 10 years.
Or less.
Okay, so you've got a reasonable amount of time. Cherry, I think you're on the same sort of plan as me. I'm 54 years of age, and I too am looking for financial freedom in the next 10 years. I think for me, it might be a bit longer though, because I can carry on doing this for, till I'm 90, hopefully, so maybe never retire. But anyway, so, the first thing you need to do, as Sensei has just pointed out on the screen, and if anyone wants to add any comments here, please feel free. Best always invest in education. No need to dive in and invest all too quickly, and don't be in a rush. These are comments coming in from the team. Well, the first thing I would say, Cherry, is what stocks and what companies interest you? Do you know what interests you, first of all?
Right now, I'm just pretty much focused on dividend income.
Yeah, that's a good idea.
I am in SCHD and S&P 500.
Yeah, very sensible. The thing is, when you're 20 years of age, you can be high risk. You can be buying all kinds of stuff. You're looking for growth stocks before their S curve, before their explosion. Whereas as we get on in life, you're the same age as me. We have already got our home, we've paid off our mortgage, we've got no car loan, we've hopefully cleared our debts, and now we're just trying to make some money on the top to give us some financial freedom. So we don't need the high growth stocks. We don't need stocks to explode, but we would like to see a growth over the next 5 to 10, 15, 20 years or whatever. So for me, what I do is I look into stocks that I am interested in, because what I try to do is buy companies like what Warren Buffett says, buy the company, not the share price. Because at the end of the day, Sherry, the share price on the day is just what people are prepared to pay for it. It doesn't reflect the value of the company. It doesn't dictate what the company is actually worth, what it means on paper. Of course, it explains what the company's worth, but it's just the sentiment of people at that precise moment in time. So for me, it sounds like you're very much in a similar target to me. I like the S&P 500 because fund managers for years have compared themselves to it and used it as a benchmark. And most fund managers can't beat the S&P 500. And these are people far smarter than you or I, far more money, far more technology than we do, more information faster than we have it. And they struggle to beat the S&P. Now, because you've got, 10, perhaps 10 years, and we've had a couple of years now of downplay, the chances are, if you just buy the S&P and hold it for the next 10 years, without any doubt whatsoever, you're going to be up without any risk at all. There's always risk, but it's not likely in 10 years' time that the S&P is going to be down, because if any company is failing It'll be dropped from the 500, and one that is performing better will be replaced without you having to worry about picking stocks. I mean, do you like picking stocks, or would you prefer a basket of funds having a broad spectrum?
Both.
Both. You're like me. This is great. So I think you were asking me yesterday on Twitter what is a scalp trade. A scalp trade still belongs as part of your overall portfolio, I think, because you can make quick money very, very quickly. You asked me what a scalp trade is. So it's when we come into a stock and out of a stock very, very quickly. It's very high risk. If we start losing money, we're out of it. We're not deep researching the company. We're not investing in the company. We're just trading off the momentum of the stock, people buying in and so on. So I think you need a bit of that. That's why we do the scalp trades in the morning. You also need a bit of crypto. For me, it's 5% because it's definitely going to be around in the future. It's going to go for all different. It's going to go through many different guises over the years, but it's going to be here. But we don't want to go all in on it. We see it as a bit of a lottery ticket, but we want a little bit of it. But I think, if you're buying the S&P, you're buying, some people argue, if you buy the S&P, why do I buy stocks that are in the S&P? What's the point? And the reason for that is because, like, for example, I'm showing on the screen now, I buy Amazon, I buy Apple, and they are in the S&P. So people say to me, why do I buy Apple and Amazon? You've already bought Apple and Amazon in the S&P. It's because I believe that tech and these stocks have an extra growth potential. So I like to own them individually as well. But my bet, I can't give advice. I'm not allowed to. I'm not a financial advisor. But my thoughts to you, Cherry, is exactly what I'm doing with my money. You're now in a great position to invest. You've got no loans and debts and credit cards. You've said that. You're looking to get a well-balanced portfolio. I think you can't go wrong with the S&P. Add a few top quality stocks if you like Amazon. I buy Amazon because I use Amazon. I understand the company, and it's more than just online shopping. It's much, much more than that. But the most important thing, I think, for you, Cherry, is understand the company that you're buying. If you're buying individual stocks, take the time to read the balance sheet. We've run polls on our channel, and the majority of people never ever read the balance sheet. They just come on, see a show like this and think, well, I've heard of Amazon. That sounds a big company, and they buy it. They've no idea what they're actually buying. And I think if you spend the time reading the balance sheet, all you got to do is go to the company website, find the financials and read it. See if they hold money in cash. Because right now, we're not in a bull market yet. And we hopefully will be by the summer. But then some people are saying not until next year. We're not in a crazy time like we were a couple of years ago with COVID, when everything was going up. Remember, anyone can make money. The hard part is to keep it. And we're now not looking for wild, crazy schemes. We are looking for stocks and companies that actually make money. So if you're investing in a company, look at the balance sheet, find out, does the company actually hold cash? Does it have debt? If it does, is it a manageable debt? And is it strong? So things like Virgin Galactic, they've got debt, they're not making any money, they're extremely risky, and we are hoping that they're going to do well, but we've got no guarantees of that. So it still belongs in my portfolio, a small amount, because if I can see great upside to this if it all comes off. However, if it goes to zero, it's not going to kill my portfolio. Cherry, do you ever use margin?
I don't never borrow money.
Hey, good for you. Good for you. I think that's very, very wise, because not because you can't make money by using margin, but I think if you've got a stable financial position where you're not in any debt, You're coming into the market with a clear mind. You're not stressed. You're not fearful. You're not worried about if it goes down, what am I going to do? Because most of the time we lose money because of our emotions. We get in and out of stocks way too fast. If we just sat on it, as long as it's a company that makes money, of course, not our scalp trades, we have to sometimes get out of those like we did this morning. If you have that mindset, the chances are you're going to do well. And when I've been talking to the team, they've been watching your trades, watching what you've been saying, watching what you've been sharing on Twitter and Discord, and everyone's really impressed with you. You just started doing this, and you seem to be learning very quick.
Well, I started investing 5 years ago.
All right. Well, it shows. It shows. Anyway, does any of that help? Do you have any questions at all?
Yeah, the reason I called because I lost quite a bit of money with the individual stocks.
Yeah, we've all done that. We've all done that, and it's so important that as a family together, and what this channel is about is being honest. If I share on the screen with everybody, and this is really, really important, when I came into the market a couple of years ago, this was my position. Look, my all-time position, I'm down $38,000. I haven't lost it. I've still got it. And yeah, $38,000, Cherry, because I came in at the top of the market. I started doing this YouTube channel with COVID, and you know why? Because it killed my music business. And I started doing this, and as I started doing it, the markets came down. We had that massive pump through COVID. Everybody was at home buying the stock market, and then everything dropped off. And I could have then sold out and sat around and waited. Well, I was investing in myself because I was building a YouTube channel, right? And I had to prove to people that I was being honest and building a family of great investors and traders by staying in the market and continuing broadcasting through all the pain of all of that. So even though I'm down $38,000, so far this year to date, I'm up 13%, nearly 5,000. So things have turned around because I've remained investing. I've not got out of the market. I cleared my margin because I had margin when I started, and I've remained, fully invested. But you only learn things from mistakes. You only learn from the hard times. When you start making money, you think it's easy and you can't lose money. But you learn things when you lose money. And I hope that by staying live and doing what I was doing, it was demonstrating that I'm here to help people, not just to pump my own channel or talk rubbish, because I could have just quit and given up and all the rest of it, but I've stayed in. But anyway, Cherry, it's wonderful to have you on the show. Just before I let you go, it's nice when we get people call in to leave a little message that I can play during the shows. You may have heard a few. It's when someone says why they joined the show and why someone should become a member and be part of our family. It becomes like a little 30-second, if you like, little commercial for our show, and I often play it throughout the shows. Would you like to do that?
I joined your show because you're honest. I want to learn more, and I don't feel alone, Really enjoy your show.
Thank you ever so much for calling in. There's Cherry, one of our members. Thank you ever so much, Cherry, for being on the show today. Absolutely great.